Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listens in the replay. It's always appreciated. This is Trust Christian in the vault, broadcasting live. If you're listening to replay, always appreciate everybody that listens in the replay. This is the Vault 331, episode 331, Haves and Have Nots. Always appreciate everybody that tunes in live, listens in the replay. Definitely want to do this episode today for our listening audience because so many people have asked this question throughout the years, and uh, we want we want to go ahead and talk about some things today, particularly with our audience. So appreciate everybody for tuning in live, listening to replay. Now then, tuned into the vault. This is episode 331, Haves and Have Nots. So we're just gonna go ahead and get into it today. So today's episode is about haves and have nots. We've had long time listeners listen for a long time now and ask many different questions about different setups and how they are to approach the marketplace. But we wanted to talk about a specific subject, particularly to a community that actually reached out to us through the vault many times. And so we definitely want to go over some things today. This particular episode is going to be going over the wealth dispersion between the haves and the have-nots, pretty much the wealthy, pretty much, and the impoverished. Anything that's under 50,000, anything that's under 48,000, $1,000 a year. So we're gonna be talking about that. The haves usually are making six figures plus in any country. That's what we're looking at. And even in the states, making over six figures is still, what people consider good money in the states. So we're gonna be talking about that today, which is the haves and the have-nots. And so today's episode is going to come from some research and some data from a institute called the Brookings Institute, Brookings. And so this is the Brookings Institute, and this is brought to us by a trustee. So we always say that all our episodes are catered towards our trustees and the questions that they ask and things of that nature. So we're going to be talking about that today, which is studies that have come from the Brookings Institute, credible institute that most people are very aware of in different communities of scholarly communities and things of that nature. So we're going to talk about it today, particularly when it comes to the wealth dispersion between the haves and the have-nots, the what people consider a middle class, pretty much disappearing in front of our eyes. The working class will be considered skilled labor as well as unskilled labor, a big mixture in between that $50,000 mark, the $100,000 mark, and then zero. So when we get that skilled labor. Possibly leaving the marketplace anywhere from 40,000, 50,000, $60,000, or really just more of like a 50,000 up, a 60,000 up, a 70,000 up. Back in the day, there used to be there used to be a time where, if you were an engineer, you were going to come out of school in a 4 year school in the United States and say you were going to demand 60 to $80,000 just because of the industry. Maybe it wasn't enough engineers, but at that time, and that was in 2000s, people were looking for that. So I appreciate Tulsa, Oklahoma for tuning in live, listening to replay. Always appreciate Tulsa, Oklahoma for tuning in live, listening to replay. Feel free to type into the chat where you're listening live from or listening to replay. Always appreciate everybody tuning in live, listening to replay. Feel free to type into the chat where you're listening live or listening in the replay from. So once again, this episode is talking about the Brookings Institute and the dispersion between wealth dispersion, actually money dispersion between these different people that are going to be creators, usually going to be entrepreneur side, self-independent contractors are going to push that $50,000 plus because they're contractors. So you may still get quite a few engineers doing independent work that are going to make over that, but we get truck drivers, ladies and gentlemen, that come to us that are making six figures, over $50,000 a year. So appreciate Memphis, Tennessee for tuning in live, listening to replay. We got San Francisco tuning in live, listening to replay. We got Tallahassee, Florida for tuning in live, listening to replay. Always appreciate all those places: San Francisco, Tallahassee, Memphis, Tennessee. Appreciate you all for tuning live, listening to replay, and getting the word out there. So, once again, this episode is talking about the wealth dispersion between what we're going to say the haves and have-nots, but we're going to talk about now us getting into specifically what was brought to us by a trustee and just wanting to go over it, which is the dispersion of wealth between Black Americans, what people call African Americans, and what are considered white Americans. So we're talking about this in colloquial terms, but this is for a general assimilation of sociology when we're talking about groups of people, ethnicities, identifying themselves, and then having cultural differences. Cultural differences come from ethnicity. So we're just acknowledging in this particular episode that there is a culture, particularly Black African American culture, in the wealth dispersion between the what they call white or Caucasian. Now, can numbers be off? Sure, we'll do plus or minus 10% of the numbers being off, but you all can go to the Brookings Institute. You all can read their studies. They do studies traditionally with thousands of people, so you all can look at the studies that they are holding. But today we're going to be talking about two particular ones, actually three particular ones. So we're going to see if we can put them in a chat here. That's probably the biggest thing is putting something in the chat for you all. So just give us a second here. We're going to see if we can put something in the chat. All right, cool. Ladies and gentlemen, we're definitely putting right now in the chat the actual uh, Brookings Institute that you all can look over. So just feel free. They're gonna be in the chat. We're sharing with you all what they call black inheritance. Ladies and gentlemen, when you all love history, just know it's not hard to research and find that black wealth in the 30s was doing really, really well. Great Depression status, ladies and gentlemen. So we're going to talk about, and this is particularly to this culture, because we relate, we have affinity with them, and we're going to talk about it today. We're going to talk about how there is a drop off in wealth from the first generation to the second generation to third generation. Why is there not a transference of wealth from one generation to the next in this particular community? This particular community is whether we want to call it underserved or not. This particular community, whether we want to say minorities of color, we can say minorities of color, ladies and gentlemen, but that's not the case. In some cases, Hispanics in the United States have advanced generationally. Whether they've been in the states for one generation or two generations, they are advancing. Whether it's through secondary, post-secondary education, whether it is in wealth retained in the community. So we're talking about wealth retained not only in the community, but within one generation to the family, to the next generation to the family, to the next generation to the family. So we're going to go ahead and share with you all today, which we went over already, which is the dispersion of the black and white wealth gap, three generation of poverty. Ladies and gentlemen, generations. Remember how they say poverty is a generational curse? It is. And you have to break that curse. And the only way you break that curse is by educating yourself in the capitalist system if you are going to play in the game over here. Not only do these studies talk about that these whites are actually less susceptible to be born into poverty in the third generation, blacks, the increase from the second generation and third generation compared to the whites is astronomical when we're talking about going from a 2% chance to a 30% chance of the families not having it. Ladies and gentlemen, not only are people not having it, they're not starting with it. They don't have anything to pass along. Why? Because the community may not be focused on what we call, let's just say, insurance policies, private family banking, things of that nature. How do they want to address the black poverty? They say black men are really the victims of this whole situation. This is what these studies are saying, ladies and gentlemen. This is what they propose. They actually say social policies, which was the New Deal, that ruined black families. It gave them financial support from the government. Now they say we should use social policy to fix this problem. So they're going to give either some type of reparation or transfer of wealth to black families. One, they said that they're going to end housing segregation. Two, these are proposals. Invest in education for black students. Hasn't that been happening the whole time? Maybe it hasn't. Support black men. Very general. Cut child poverty. Do you see these general terms? These general terms that they want to throw out there, proposing these policies that you can't make it because there's a generational curse on your back. If we could only tell you it was a generational curse, it doesn't matter if you're black or white, as Michael Jackson said. It doesn't matter. You have to educate yourself. They say we posted it inside of the chat. You all can click on the links from the Brookings Institute on black poverty. It's about the men. You guys can Google it. Brookings Institute, Inheritance of Black Poverty. It's all about black men. Now, we're not going to say that it's their fault, but we got to take responsibility, black men. Why? Because the information is the information. The relationships that you have to establish are going to have to be there. The relationships. Ladies and gentlemen, the vault has provided a median for black men to come together, to possibly do business together, for minorities of color to get past these so-called barriers of color dispersions, which equals a wealth dispersion from passing it along from one generation to the next. Now let's look at this. If your dad was a plumber, and your grandfather was a plumber, and your great-grandfather was a plumber, it's safe to say you're supposed to be what? A plumber. See, in the community, what was the trade of your family? Do you have a trade for your family? Do you come from a family of doctors? Do you come from a family of accountants? Or do you come from unskilled laborers? Oh, working at McDonald's doesn't require a lot of skill. Working at the grocery store doesn't require a lot of skill. Working at the post office doesn't require a lot of skill. And neither does getting on the internet and creating a YouTube or some type of internet uh, information sharing gathering spot. Because we're going to talk about that now. Because there's internet hucksters. There's internet shysters. People say, well, Trust Christian in the vault, I don't know how to invest my money because I don't know, should I give this person my money for education? Should I give this institute my money for education? It's so much information on the internet. And here, this is what the vault, when we came on the internet and said, all the private information, it's not on the internet. So how are you going to be in the private if the private is not on the internet? But people swear, oh, I trust Christian, I'll come back, give me the book. Ladies and gentlemen, wealth building, people would want to believe that the wealth building is happening on the internet. What? One or two companies? One or two apps? Based off of an algorithm. Algorithms that you control, or people may be manipulating algorithms, which they do. They control the algorithm. So let's get back to this narrative, this algorithm that says there's a dispersion in wealth. There's a dispersion in the wealth gap. Are you educating yourself to make six figures? Are you educating yourself to make seven figures? Are you educating yourself to make 8 figures and 9 figures? It's an education. Is it all at school? Clearly, everybody that went to post-secondary didn't become a millionaire. It's not a guarantee. So what education are we talking about? We're talking about that capitalistic education. That capitalism education. The education that says you employ people through EIN numbers. So we had a trustee come to us and say, It's interesting to see some of these people sit on the internet and try to sell trustee training for $99 a month. If you're in trustee training for $99 a month, we don't even have to laugh because it's a joke. $99 a month to learn wealth information? Your grocery bill costs more than the thing that's going to keep you private for the rest of your life. It sounds like Walmart. It sounds like you're getting a cheap end of the deal. And we share with our trustees. It's a pay price to action. It's a risk reward not. What are you willing to risk to get a reward? The private education cost some people millions of dollars. It cost Bill Gates millions of dollars. When Bill Gates was going through an antitrust lawsuit with Microsoft, the feds came after him and said the entity wasn't paying any taxes. So what did he do? He allowed himself, they told him he had to pay $1 million penalty, whether it was a month or a day, it really doesn't matter. $350 million for his company could have been not a lot at that time. And obviously, you know that their company is a multi-billion-dollar company. So millions of dollars leaving a day for only 9 years was only to put them back in a position where the Bill and Melinda Gates Foundation was created. Where the Bill and Melinda Gates Foundation took over shares for Bill throughout the years from that point forward. Throughout that period of him paying $1 million penalty, whether it was a month, whether it was a day, what difference does it make? Ultra billionaire because he played the game of capitalism correctly because he got the education. He paid for the education, whether it cost him $1 million a day, whether it cost him $1 million a month, he was willing to pay. We're going to continue to see what's almost considered to be a wealth dispersion because there's an educational gap. When we talk about financial literacy being introduced into the public school system, ladies and gentlemen, the haves have the information. The have-nots don't have it. So what benefit does it give to the haves to give to the have-nots? And as we were talking to the trustee the other day, the conversation went where when you are a have trying to help out a have-not, those people are likely not to make it out. Those people are likely not to stay in the have position because they're mixing their brain frequencies with have-nots. And the way you get around not being a have-not, because we talked to someone the other day and we asked them, well, do you consider yourself a have or a have-not? And they actually said, well, I don't have anything. Ladies and gentlemen, you are your greatest asset. How much are you valued by? Guess what? If you got an insurance policy on yourself right now, what does the insurance company say about your life? How much do they say you're worth dead or alive? This is an actuary company. A company that plays probabilities, that takes the money you give them invested in the stock market and ready to pay out upon death. The haves make sure that their successive generations have something. So the way you do that is possibly through a small premium of insurance. You don't have to give them a lot, but they have something to start with. So when we talk about these Brookings Institute studies, we're talking about things that you all can go research on your own. You all can see that there is a dispersion that's happened. And this is partially because of when you read the reports or these articles, you'll see that there has been systematic attempts to thwart and stifle. And what people don't understand, capitalism is a competitive society. So in order for a group to advance, they have to practice team unity. They have to practice the have mentality. If not, they will continue to be the have-nots. Because groups can do it. Onesies and twosies can do it, but it's rare. As you can see, they're rare birds. But groups, families, do it. Appreciate Callie for tuning in live. Always appreciate California for tuning in live, listening to replay. Got Mississippi tuning in live, listening to replays. Always appreciate California and Mississippi for tuning in live, listening to replay. Feel free to type into the chat. This is the Vault episode 331, haves and the have-nots. So let's get back to it. The haves. See, that's what comes to the Vault. They have something to give. They have a student mentality. When they come to the Vault, when they're in the trustee training, when they go through trustee training, you have a student mentality. That's what you gotta have to be a have. You can't come to the Vault. You can't go to any program saying, well, it's just Christian. I'm over 45 and I wasn't born with a computer, so I'm not too computer literate. And the world does not care. The haves don't care because they have it. So you have to get it. Well, just Christian, I got a lot going on in my life, and, studying for 9 minutes a day, it just seems like possibly a lot. And that's why the haves have it and the have-nots don't. Because it's the little things that make a difference between you being a have and a have-not. Haves know one principle for sure. It's called compound interest. The haves are very aware of compound interest, ladies and gentlemen. They know how to utilize this leveraging tool. Do you? Are you leveraging people? Are you leveraging money? Some of the two greatest tools we could ever leverage: people and OPM. The haves. The haves, they have mentors. The have-nots, they have teachers. They go to school. They look for a test. They think life is a test. Oh, if I pass this and pass that, it's supposed to all work out because that's what they told me in school. But does everything work out to the plan? No. The haves know that. The haves look for people that have more wisdom than them. The haves look for people that have more knowledge than them in particular subject matters. The haves focus on education and knowledge. So we had the same trustee with this conversation came up and said, well, there's this old saying that says knowledge is power. So we don't remember the series that they said that they were watching, but it was a TV series. And the person there was these two people having a conversation, and one person says knowledge is power, and the other person said no, power is power. You have to utilize what you call power, ladies and gentlemen. Power is power. Knowledge is knowledge if you don't do anything with it. How many people do you know went through the Vault? They went through the training. Maybe they got it, maybe they didn't. Do they have it or they have not? Do you have it or do you have not? And if you have not, here we go. There's nothing wrong with being a have-not. Quite a few millionaires and billionaires are first generation. So they were have-nots before they were haves. You hear about these tech stories all the time. They were have-nots. If they were not haves and they were have-nots, what did they do? They got mentored. They studied. They studied their craft. They studied what they were doing. They created a plan and they executed it. Do you have a plan for your life? Do you have a plan for your financial future? They say more people plan a vacation than they do their financial future. Wow. Did you plan out the next 30 and 90 days like a corporation does and says, what's the earnings going to be? Well, you know that, okay, this is how much your rent's going to be for the next 3 months. This is how much, the car insurance or car payments. This is how much your grocery bill's going to be. Okay, that's your baseline median performance. You got to meet these bills and that's your base. Anything outside of that is considered a what? A earning. It's a savings. See how easy this is when you get into the true financial information, when you can break your life down into trading? Because you are trading what?
time for money. Aren't you trading your intellectual property for royalties? When you do songs, when you do any of those type of activities, so you're trading now. You know your baseline, ladies and gentlemen, the vault listeners, the ones that have gone through the trading classes, you know what you need to pay your life every single month as far as the base. Let's talk about the earnings. Do you have any projections? Do you think you're gonna get $2 per minute, $2 plus? Are you gonna earn $2 per plus per minute? Are you gonna earn, $100 plus per day? Are you gonna earn $1,000 plus per week or plus per month after you know your base? Are you gonna earn that? Because that's what it's called. It's called a earning. See, you know what you need to live off the principal, your principal life. But what about the earnings? See, this is where the game gets fun because now you're in the earnings of your life. Those earnings can be what called what some people try to call untaxable investments. Why? Because sometimes you do have to spend money to make money, but we call it investing. So instead of you calling it spending, you should be calling it what? Investing. Guess what? It's a write off. We're not giving tax advice or legal advice. You can look it up. It's a write off. Why? Because it's going to build the what? Business. But are you in a business capacity or a personal capacity? So how do you calculate your business calculations? Oh, trust Christian, I don't know how much I need to make every single month because I got a job is paying for my bills, but I got another business and I'm trying to build a business. Well, let's just talk about the business. If the business had to pay the bills, how much does it need to earn? That's principal. What about outside of that? That's earnings. Now we know what the company needs for earnings. What does the business need to operate? Outside of those operations, it's the earnings. What are your projections now? Are you going to earn $1,000 extra a month, 10,000 extra dollars a month, $50,000 extra a month on top of how much it costs to run the business? Those are the earnings. Trust Christian, I didn't know how to calculate that my whole life. I didn't know how to calculate how to just basically build a projection out, and it's an internal expectation of my company, and that's how I build out my life. That's how I build all my life, Trust Christian. I have to project it out based off of what I did the past 90 days. What did you do the past 90 days in your business? What did you do the past 90 days in your life? Well, if you haven't tracked, it's time to track. The haves have track of their time. They have track of one of the greatest assets that you can never get back. It's actually a finite commodity. When they talk about gold and silver, we can get these things from other planets, ladies and gentlemen. They're trying to mine gold and silver on other planets and even trying to see what other metals they can get off of exo planets, whether it's the moon or otherwise. They're trying to get metals. But time seems to be a commodity that we actually commoditized, but we cannot get it back. But it does have value. The haves learn how to multiply their time. The haves multiply their time. How are you going to be a have if you don't multiply your time? The have nots, all they have is their time. And then how can you have only your time when we said it's a commodity that you're losing? It's not a bad thing that we're losing it, but it does have value in the moment. The haves focus on having value. The have nots don't feel that they have value. What value do I bring to the table, Trust Christian? What? I don't have any assets. I don't have a house. I don't have a car that's paid off. I don't have an insurance policy. The haves, they have assets. They have gold. They have silver. Oh, Trust Christian, you've been telling us for years, and the vault's been telling us that gold and silver are still precious metals. Right. Did you grab a $25 ounce of silver? Appreciate Delaware for tuning in live, listening to replay. Always appreciate Delaware for tuning in live, listening to replay. Silver and gold. Oh, let's overlook these things because we got to get the money. Money, money, money. Money, money, money. People want to get the paper. Oh no, people want to go get the dead money called crypto. They want to go get dead money. money that's being stolen. We just saw something go across the screen today that said $500 billion was stolen. Half a trillion. So that means it was 500 billion was stolen through the crypto market. It's called the dead money market. It's not a real money. It's not a real currency. It's just a phantom of an account. And people are putting money, their life savings, and getting totally blown away. If you're not a millionaire, how many do you know that are crypto dead money millionaires? It's dead money. Are you backing it? What backs the money? Oh, I don't want a money that's backed. You don't want a money that's backed, right? Some money's, well, the money's backed by land and it's hypothecated off these different land masses. Ladies and gentlemen, it's still considered illegal. It's if it was a security, they do have securities that are issued off a land mass, whether you know it or not. Those are called REITs and many other land trust and other things. These are securities that are issued, security docs that are issued off of land masses. Those are legal instruments that you all can look into, whether it's a REIT, whether it's a land trust, having any type of selling of land rights or anything of that nature. So when we look at that, those are true securities that are regulated, that if you lose your money, there are consequences. If there's some type of nefarious type of activities that have gone on in these particular situations. But now we get into this, oh, well, the government hasn't stopped it yet. So that means it's okay to lose your money? Well, I know it's going to the moon. We'll get back to the haves. Because the have nots, they don't have a financial plan. Remember, they're waiting for it to go to the moon. They're only waiting for it to go one way. They're not traders. They're not expecting, they don't have true projected earnings because it's not a business. It's a tchotchke. That's what it is. It's a gamble. Oh man, I don't want to get into that trading stuff because it's gambling. How's trading not gambling? How's trading not gambling? How is getting in and waiting for something to go to the moon not gambling? Who's the creator of the business? Well, that doesn't matter, you know. Okay. Do you hear these type of statements that people can make? What happens when you have millions of dollars? The haves. You can't just pitch a have and say, hey, I need you to go into this investment, but I can't tell you who owns the business. I can't tell you who started the business. I can't tell you I can't even tell you that it's legal in any exchange market. So once we put money in it, we're liable to lose it. That's fair. In any investment, there's a risk reward return. But what happens when we ladies and gentlemen, look into the thought process of this type of thought process. Inquire about it. Are the haves really doing it, or is it a have not situation? Think about who gets into these type of investments. Who gets into these type of things? The have nots, not the haves. The haves don't need a majority of their wealth in dead money, in black market money. They built it the proper way. They built it on public exchanges where even you can be involved. And there's true laws against people trying to pump and dump your money in a stock, to pump and dump your money in a company. And they actually have to report the owners. They actually have to report their shares. Oh, but you don't know who owns the majority share of the Bitcoin, do you? You don't know who owns the majority share of the Ethereum. But hey, hey, and if you really want to know, if it's the banks, why won't the banks allow you to open up an account that can receive money from these exchanges? That's a coincidence, right? It's not a coincidence. The haves. Some people say, oh, the haves have their wealth in real estate, tangible assets. We had an investor come to us and say tangible assets. See, the haves have a diversified portfolio. They have tangible and intangible assets. So yes, they do have land. And as well, they have paper assets. So when some investor says, oh, we're going to keep our portfolio tight with just hard assets, this is why people in these paper assets feel like they can run up a muck, run up a Terry real quick, because they feel as though, hey, when you get into this cryptocurrency stuff, I get thousands of percents return in a month or a year. I'm getting 1,000% return. Well, guess what? You can get those in a safe, quote unquote, stock market and equity markets as well. We have a asset manager managing billions. Kathy Woods says she developed her portfolio this past year 1,300%. You all can go look up Kathy Woods, 1,300% portfolio increase. You can do it in traditional equities where you're quote unquote not able to get stolen from in a manner in which she didn't. So you can as well. But the crypto market, we have seen it over and over and over because it's what? Unregulated. It's a black market. The haves know this though. The have nots have the information. They know who's involved. That's why they're not involved. The haves don't have crypto. Why would they? Some people say, "Well, I'm going to put 1% of my portfolio like the big banks, and I'll do 1% portfolio status. I'll do 2% portfolio. It really doesn't have anywhere to go but up." Hmm. That's what everybody would like to say, right? It's just going to keep going and keep going, like the Energizer Bunny, right? One of the worst pump and dump schemes we've seen over our lifetime, actually, in the vault's actual humble assessment throughout the years. Right now, ladies and gentlemen, we're looking at the roaring 20s again. We're in the roaring 20s. Wealth transfers are happening right in front of your eyes. When you see these pump and dumps like a AMC, when you see a pump and dump like a GameStop, I mean, you're seeing pump and dumps, ladies and gentlemen. You're seeing insider trading happening right in front of your face on some goddamn on social media, and it's pretty embarrassing to know that the novice investor, these young investors, whether they're Robinhood investors or not, I mean, let's go look at the Robinhood actual stock because they just went public. Now you think about it. Look how long it took Twitter to go public, and then look how long it took Robinhood to go public. I mean, Robinhood went public rather quickly. Why? Because they understand that when you are in the game of trying to manipulate and lie to people, what happens, ladies and gentlemen? You literally have to do these type of things that put you in a position where literally they're trying to cash out. This is the cash out moment for such a disingenuous company in America. Literally a $45 billion market cap. They've been given $45 billion through private and public investors, whether it's through the private market of banks or public investors now through the valuation of the company. This company literally, ladies and gentlemen, they went up. They had their height on August 4th at $70. Right now, they're at $53, ladies and gentlemen. As we report this live, we're not reporting stocks. We're not calling stocks. We're not giving you any financial advice. We're not calling. We're not promoting these companies. We're speaking very objectively about looking at this company. When people talk about this company in their portfolio, we're looking at this company and saying, well, hey, this is the same company that literally was just in an investigation on a federal level. Literally within the past 12 months. And now this company decided to go public. This is the same company that said, oh, we had to shut our website down because we couldn't handle volume. Hold on, did you hear that, crypto investors? The same type of companies that said, we are allowing you to buy crypto through our website. Hold on. They shut down because they couldn't handle the volume. This is a financial institution. This is not the NASDAQ. This is not the S&P. Yes, we are in the age of unicorns. And this is one of those unicorns. They're going to come and they're going to go. They got a lot of publicity. Do you even know how this company gets paid? Do you know how this company gets paid? You think that you're investing your money into what? A trading platform? They're not they're not E-Trade, they're not Fidelity. They're not, are these people FDIC insured to handle money as an intermediary? No, they're a company that's listed on the NASDAQ. They're a company like JP Morgan, like Wells Fargo. But are they financial institutions? Or what do they classify this company as? Is it a technology company like Uber? When people think, oh, Uber's a driving company, ladies and gentlemen, it's Uber Technologies. They are a technology company. Well, can you make payments through Uber's app? It's sort of like Apple. Is Apple a financial intermediary when you do Apple Pay? Is Google a financial intermediary because they allow you to do Google Pay? Are these financial intermediaries? Are they banks? Are they FDIC insured in the States? Those are called securities. Those are called insurances on your money. When this company gets paid off of hedge funds buying the data so they can take positions against the public market, it's already been reported, ladies and gentlemen. When they go back and look at the congressional hearings they had with the company, and they're asking them, what do you do with your users' data? Did you sell off data to these companies to take a position and sell off in a GameStop app? Did you have any type of collaborations with an app called Reddit? Why are these the only two stocks when they had that pump and dump in 2021? When they had the pump and dump, when they had the pump and dump, it was a pump and dump, correct? It was a pump and dump. But how many people are aware of these type of things? Appreciate Jacksonville, Florida for tuning in live, listening to replay. Always appreciate Jacksonville for tuning in live, listening to replay. This is the haves and the have-nots. See, the haves, they create the news. The have-nots, they watch it. Well, people say, well, Trust Christian, where am I going to get my financial information from? The Brookings Institute, statistical platforms, Nielsen's. Was it Nielsen's? You can get it from Reuters. Uh, you can go to, there's so many different studies out there. You can get the, what is that? The PMI, Purchasing Managers Index. Uh, what else can you get? People look at the farm report. They look at the jobs reports when they come out. Jobs reports. These are big studies. Consumer Price Index reports. Uh, Looking at consumer, not just consumer, yeah, consumer discretionary spending reports. You can go look at housing. Those reports come out by the government. How many houses are being built? How many permits are being done? These are the different things that you see to let you know where the market's at. Those things are filed every month. These are when you learn to how be it to learn the news. You learn how to go and get the information from the sources that were supposed to report it. Because it's interesting that they're able to compile this data, but they're indicators. It comes from trading because you're trading time for money. You're trading your intellectual energy for money. Your physical energy for money. Ladies and gentlemen, see how we just talked about the information gap? Where do you go to get the information? What is it? The Michigan Consumer Report. You guys can go. It's the MSCI. You guys can look into it. That was a good one. You're looking for a different type of consumer reports to see where the consumers are. Um, you know, it's so many different places to look for the quality information. So the haves, ladies and gentlemen, they're learning how to actually be great managers, great trustees. Because when you have, you're an asset manager. You're a have, you're an asset manager. So as an asset manager now, we have to study asset management techniques. Whether you want to talk about it in trusteeship, that's why we have trustee training at the vault. If you guys want to get in trustee training, it's christian@trustchristian.com. Once again, it's christian@trustchristian.com. Feel free to look into the description as well. The email should be there. Feel free to reach out. We do consultations. We work with trustees. We actually have our next workshop coming up. We actually are setting a date here, so we should have it here. And it's traditionally for the trustees, so we always let the trustees know. The workshops are for the trustees that are currently enrolled. Get into the workshops, and we're just going to say that we had a grand year this year. So many trustees have gone from positions of what they even considered themselves a have not, and now they're a position of a have because they were able to take mentorship, they were able to take reproach, they were able to not have an ego, but have a sense of student mentality. So we're happy about the trustees that have gone through the program this year, and in the past, because there's so many that literally have turned themselves into major haves, just because of the fact that they got the information, they're in the correct position, and they actually have made it a point to become now what we just mentioned, which is become a better asset manager. Being the best asset manager is all we are. When we even talk about stewardship as a trustee, we're talking about stewardship. And so this is where we get into where people say, "Oh, if you're a steward or you're a trustee, yada yada yada, how are you stewarding the information, trust Christian in the vault?" Well, we'll just say this much: there's a lot of people on the internet that are catering to the have-nots. We're not. The information has to be focused on the haves. Period. It has to be focused on the haves. And as long as you focus on having an asset to manage, you'll have somewhere to start, you'll have somewhere to go. And that's how the trustees move in that particular fashion. Even if you're starting from ground zero, you remember that the greatest asset of the trust is you as the trustee. We know that. And so we're talking about giving from one generation to the next. That's what this is about. Giving from one generation to the next. It's challenging to get out of poverty if you don't pass anything along. It's that simple. So that's what we're here for. We're here to work with the people that want to pass something along from one generation to the next. Bottom line. And if you want to do that, generational wealth, you can break the generational curse of your family bloodline being a have not having the financial information that you need. Think about it, ladies and gentlemen. The country's been around for hundreds of years so far. Maybe not hundreds of, like 500 plus, but capitalism has birthed poor people and has birthed wealthy people. There have been slaves that have become rich in this country, ladies and gentlemen. Please, let's not overlook the facts. It's a system. Once you learn the system, you can systematize the system to your life. Slaves did it. But now we got 3 or 4 or 5 generations once again of these black people, these African Americans in the country that have not gotten it yet. And we're talking about the wealth dispersion. How do you get rid of that wealth dispersion? You get rid of the wealth dispersion by what? Education. It can't just come in emotionalism. It has to come in financial education. It's not a ooey gooey feely touchy subject. It's a black and white subject. It's the numbers on the paper subject. It's economics. Oh no, Trust Christian, you're preaching to the crowd, choir. You're telling us, hey, we should be focused on our money. That's what we're doing. But what happened to group economics? That's what the vault provided. That's what the vault has done for years. They say you come together because people in trust deal with who? People in trust. You know you can trust these people. We got people that contact the vault that their own family doesn't trust them, that they don't trust their own family. And it's sad to say we've had people come to the consultation and not even trust their own marital partner. So they get in trust because people in trust deal with people in trust. That's what. Why do they say most divorces happen? Because of finance. The haves don't mind using prenups. The haves don't mind having trust in place. They're protecting their previous assets. The haves. Ladies and gentlemen, are you building a community with people that you can trust and trust? Or are you trying to pity pat it and fiddle fat it and tantalize it and see, let me massage this wealth stuff. Let me massage it. Let me get a feel for it. Ladies and gentlemen, you get a feel for it when you visualize it in your emotions. When you visualize the money in your hand. Otherwise, there's work involved. There's connecting with other people that's involved. There's an education that is involved. It's not just fantasizing about it in your mind. The haves, they create from thin air. Do you hear that, ladies and gentlemen? You wanted to know, well, how do the haves have it if they never had it? They create from thin air. Do you have that ability to create from thin air? Can you create from thin air? Or are you begging for a handout first? Because that's the difference. And if you are willing to get on your knees and allow somebody to give you something because you asked for it, just know you can stand up and create it from thin air. Because the same person that got something before you did, you can create out of thin air and give. See, these are laws of the universe that people don't want to discuss in business or in life. Why? Because you have to create out of thin air. It's an idea. It's a dream. Do you have one? Are you willing to visualize it? Are you willing to talk about it? Oh, I don't want to share my dreams with people. You're right. Someone said the other day, don't share your vision with blind people. Are you sharing your vision with blind people? How many people are sharing their vision with blind people, family and friends, their neighbors, when you're looking to be a multimillionaire or a billionaire? The haves, it's inside them before it ever manifested outside. You got to have it in your heart, your mind, your spirit. What do you mean, Trust Christian? Do I got to have the money? Do I got to have the dream? Do I got to have the relationships? You got to have whatever you want. But you got to have it inside first. How you gonna give something you don't have? See, that's why so many people are giving from a dead space. So really they're not giving. What they're really doing is being a succubus. They think that they're giving, but what they're really doing is leeching. Because they feel they don't have anything to give. And when you feel you don't have anything to give, you naturally are gonna take. Because you're suffering. What somebody said earlier today, oh, sometimes you just gotta survive. You're already doing that. Breathing air is dang on surviving. Getting one meal a day is surviving. But when are you going to thrive? When are you going to be at your greatest? Because there's a difference between being okay and great. You have to be great before you get great. Because if you okay, you're going to get okay. And this is what we talk about, ladies and gentlemen, in our trustee training. Feel free to reach out, Christian at trustchristian.com. Once again, we appreciate everybody that's tuned in live, listening to replay. Uh, when you get in trustee training, we talk about the mindset, not just the mindset. We talk about obviously different structure aspects, different management techniques when it comes to structuring your management system and things of that nature. Because it's all about management, ladies and gentlemen. It's all about maintenance, ladies and gentlemen. That's what it's all about. So many people say, "How do I get through the process?" Everybody says they want to be in trusteeship, right? Everybody wants to be in trusteeship. I want to own nothing, control everything. I want to live this lifestyle. It's not made for the faint of heart, ladies and gentlemen. It's made for the true stewards. It's made for the true trustees that know that all they have is their ability to just give. Give time, give energy towards growing assets. They know that. And that's what they give. They give what they have. They may not have all the knowledge, but they do give their time. They may not have all the knowledge, but they do give their energy. Ladies and gentlemen, there was a group of people around like 2012. It's called the Moorish Group. This group of people. They were like, look, if you claim your nationality for black people, if you claim nationality, then there's going to be this birth certificate whole situation where if you get it authenticated, it's going to be worth some extra money, or it's going to be worth the money in gold. And then some trustee comes to us the other day and says, well, I googled on the internet. Here we go. Here's Google, the bathroom wall of the internet. The Google comes on and says, well, if you put 21 pieces of silver to the birth certificate, or 9 pieces of silver to the house and the birth certificate, you hear all of these vigilante, broke, have not mentalities. And we say, well, the haves. Have you seen a have do that? Have you seen a billionaire do the birth certificate stuff? Oh, no, they don't have to do it. Ladies and gentlemen, they're black billionaires. Okay? There's billionaire minorities. So, because that is the case, there's a system. Everybody doesn't follow the system, and everybody doesn't get that system because the haves are competitive. And you best believe they're not trying to disseminate the information too easily to allow people to come into their community, to allow people to come into their environment. Now, if you want to believe in their goodwill heartedness of giving money away and not having an expectation of return, ladies and gentlemen, we are asset managers. We have to expect something in return. Nothing can be free. Clean air is not free. You're living in an era where clean water is not free. Clean housing is not free. Clean clothing is not free. What is free? Everything comes with conditions, and the haves are aware of it. We appreciate everybody that tunes in live, listens to the replay. Always appreciate everybody for doing that. Once again, this group of people, they said, with the Moorish group, if you get your birth certificate authenticated, you'll be worth some money. Supposedly now, this birth certificate, a security instrument that they mysteriously found out around that time, was worth some money. And then in 2020 and 2021, where are these people on the internet? Nowhere to be found. They're not 100 millionaires. They're not multi-millionaires. We don't hear anything about these people, but we get these people reaching out. We get some of their underlings, and we get people that come reach to the vault, and they say, these people tried to teach me this information. They tried to share with me that my birth certificate as a black person is worth something in the United States, and I'm just worth my weight in gold. I'm worth 21 pieces of silver on my birth certificate, and my birth certificate is supposed to make me worth $100 million because that's what's on the debt clock on the internet. Okay, every citizen's worth this. So I just got to authenticate my birth certificate. Okay. And we see them 10 and 11 years later. And these people right now, they're still not building communities of trust. They're over here telling people that reach out to the vault just yesterday, literally reach out to the vault and say, hey, I got an EIN number, but I don't have a trust document. Then how do you have a trust? I got an EIN number, but I don't have a trust document. I got an EIN number, but I don't have an operating agreement. Right. That's what they say. They reach out to the vault. I didn't get the trust document. Why not? I thought I had a trust because they gave me, oh, here we go. This is what they said. They gave me a security document. That's not an indenture. And they were like, oh, well, I didn't know. An indenture? I got to go look that up. You're right. Because the shyster that just took your money for thousands of dollars on the internet, the ones that told you they were going to give you your freedom ticket for $4,000, for $5,000, for $6,000, for $10,000. We've seen it for $20,000. Oh, you think we haven't seen it? We've seen it where we've had people making over $250,000 a year. Oh, I got hooked up with this guy in Atlanta. Mosim Top, Hasim Top, Rosim Top, Asim Sudset. Whatever the heck his name was, her name was. Oh, well, you don't have to deal with the tax liability because you're foreign and you're a black man and you don't have to deal with it because of your birth certificate. This is have not information. You don't have to deal with that stuff. Oh, yeah? And guess what? These people end up Years later, not making any money, not getting any wealthier, and not having anything. Why? Because they're trying to get something for nothing. See, you hear that mentality over there? If you don't get that out your system, you're not going to have anything. And that's a promise from the universe, not from Trust Christian in the Vault, because you're listening. That's a promise from the universe. You can never get something for nothing. You have to breathe out air to actually get it to come back in. You got to give to the universe air so you can get it back. That's the law. And if you obey the law, you will have what we're talking about. But if people don't want to focus on having or giving, they're going to focus on something for nothing. My birth certificate is worth something. When we just sat here and saw the Brookings Institute say, black people, it don't matter if you got a birth certificate worth $100 million, $10 million, it doesn't matter. Why? Because they were still born into poverty. So it's not about how much your net worth is it? Is it about your net worth? Because if the birth certificate says it's worth $100 million, and they're saying that most black people are born into poverty and won't escape the clutches of poverty by 2030, and they'll permanently be in it. They're 5 generations in the United States plus, and they're less likely to get out of poverty than they were in the previous generations. What a shame. And are you about to be the fifth, the sixth, or the seventh generation that doesn't make it out of making over $50,000 a year, making it and passing along some money to the second and third and fourth and fifth generation? Somebody typed in the chat, well, one of the mentors told us a long time ago, freedom isn't free. If you want financial independence, if you want financial freedom, you are going to have to do something, not accept it as the way it is. Because the way it is right now is the Brookings Institute saying, if you black, you're probably not about to make it out of poverty if you don't get on the ball in the roaring 20s. And by the time 2030 comes around, you're making over 6 figures, cash flowing, and possibly not having to work for it, but having it passive in the States. Or you really don't stand a chance. And you're most likely they're saying people are gonna permanently be in it. Because it has to be an internal development of education. And that's what the vault is here for. It's here for those brothers, those people that look like us, that say, we need someone to relate to in the trusteeship field. We need someone to relate to in the business field. We need someone to relate to, whether it's male or female. We need someone to relate to, where they come from those circumstances of a have not to a have. And you can do it in one generation. That's where we are, ladies and gentlemen. Are you that person that's going to make that decision for the bloodline to be a have? Or are you going to allow another generation to be cursed and be a have not? And you know what a have not is, because we're talking about now the eroding middle class that you all know about. The eroding middle class, wealthy or poor. Make a choice, ladies and gentlemen. We look forward to hearing from all of you all. Appreciate everybody for reaching out. Feel free to reach out. We're doing our next workshop. Feel free to reach out, Christian at trustchristian.com. Always appreciate everybody for tuning in live, listening, or replay. Definitely going to be doing some more episodes, but haves and have-nots had to happen because so many people think there's something for nothing. You can't get the private information over the internet. It just doesn't work that way. We've seen it over and over. We every time we're on the phone with consultations from since we started years ago, we've always had people say aha moments, aha moments, aha moments. Why? Because the private information is an aha moment. It's even when we sit down in front of public accountants, ladies and gentlemen, public accountants will say, "Oh yeah, we studied that in school, but we really haven't had a lot of clients that we've had to implement those strategies and management systems with." There's no, they just that's just the way it is, ladies and gentlemen. The haves have specific pieces of information, but it's not just having the knowledge, ladies and gentlemen, because we see people trying to peddle information over the internet, talking about some trustee training is $99 a month, and we want to go ahead and set the trustees straight out here that's dealing in that garbage. We're gonna tell you, we know who they are. We know what 99 cent, $99, a 99 cent, or whatever they are. Ladies and gentlemen, this is how you know it's a small community, because we heard about the 99 cent or the $99 program. And everybody wants the private information to be nice. We don't know one billionaire that's nice. Because they're not nice people. They're business people. They are sharks. Did you forget what waters you're in now? You're in trust. We're sharks. And at least the vault is able to be honest with you all. And let you all know you're swimming in shark infested waters. So if you're a guppy or a minnow, it's not the game for you. Get out of the waters. But if you say you're going to be a trustee, just remember, are you going to be a big fish in a little pond? Or are you going to be a big fish in a big pond? Because the haves are big fish in big ponds. The have-nots, they can be big fish in a little pond or little fish in a big pond. They could be little fish in a big pond, but they're never in an advantage position. They're fighting over everything. Appreciate Maryland for tuning in live, listening to replay. Got a bunch of people listening today, tuning in live, listening to replay. Always appreciate Maryland for tuning in live, listening to replay. Let go of the something for nothing mentality, which encompasses you to focus on having pure responsibility, and in turn puts a person in a position where they're going to be able to manifest everything they need to manifest. Whether it takes time, that's only remain to be seen. Think about how easily you found the private wealth information through Trust Christian in the Vault. Think about how easy it was for you to do that. It wasn't maybe easy, but it was easy. There are many families that were praying to put their families in a position that Trust Christian in the Vault, and the Vault has been able through the trustee training to help them out. People have been ever so thankful for going through it. Think about how you manifested that. That's how much you got to focus on continuously manifesting wealth, and you'll have it. It's not easy, but you'll have it. You got to focus. Now that you got some of the keys, remember it's keys to these doors. You know, it's more than one door you go through when you're acquiring wealth, because there's levels to it. And when you talk about getting that wealth, you gotta first get what's the four keys to wealth over at the vault, ladies and gentlemen. First, you gotta get protection. The second one is you gotta preserve the money. Why? Because the money that you're earning, the paper, is a depreciating asset. Money's cheap right now. Everybody says, oh, the dollar's trash, the dollar's trash, the dollar's not good, the dollar's not good, the dollar is weak. Guess what? There are more dollars in circulation than any other currency in the world. Did you know that? Or you want to keep talking smack? Oh man, the dollar's losing value. Well, there's still more dollars in the world. So even though it's losing value, there's still more dollars in the world. Where's the next best currency? Hold on. Here we go. Let's go ahead and do a propaganda tool real quick. Let's do a propaganda tool with the narrative that they put on the TV. Oh, China, 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 China. Okay, so let's go to China. Can you buy any of China's currency? Is China's currency circulated outside of their country? But for some odd reason, one of the biggest countries in the world, billion people, you can't buy their currency. Right? Right. Ladies and gentlemen, don't be fooled by the propaganda. The dollar is here. We're going to play our odds. The dollar's a commodity. It's just like copper, it's like oil, it's like any other commodity. Currencies are commodities now. That's why the crypto thing has held its weight, because it's a commodity. That's what they had to turn into. So they went to, that's why they're out there in Chicago, because they're dealing with the Chicago Mercantile Exchange. They're dealing with the CBOE. They're trying to be linked up and considered as an asset, which is a commodity. So when we look at it, ladies and gentlemen, you have opportunities. We're in the roaring 20s right now, whether you all believe it or not. There were more billionaires created, more millionaires, we'll say, from 1920 to 1930 during the Great Depression. Go look it up. Go do your homework. Go do your research. In times of great desperation, great tough times call for tough people. Only the strong shall survive this wave. Only the strong. You got to get educated and you got to build a base, a financial base, so you can carry yourself into the next 100 years for your bloodline. Whether it's one, two, three, or four, or five generations. Whether they say the average generation is 25 years, 30 years in the workforce. Do you think the average human at this point is going to be able to only work 30 years and retire? Haves and have nots. Haves and the have nots. It's too easy to be a have not because you just accept whatever people gonna give to you. Some other man or woman. When you're looking to be a have, you create, you give. You focus on being around other halves so you can continue to multiply. Tough episode for some people because so many people come from the have not position and it's been brutal getting out of that position. It's been hell getting out of poverty. It's been hell getting out of working for money. And some people just want to lay down and just go to sleep. And that's a choice you're going to have to make. But the haves, they made a choice to create value. We look forward to hearing from you all. Out of thin air. They create value out of thin air. Wow, isn't that magic? It sounds like a God given right. Sounds like your divine power. Appreciate everybody for tuning in live, listening to replay. Always appreciate it. Feel free to reach out, Christian at trustchristian.com. Christian at trustchristian.com. Look forward to connecting with everybody that's connected with the vault throughout the years. The trustees. Appreciate all the trustees and everybody that's tuning in live, listening to replay. Y'all know y'all always appreciate it. Feel free to share the episode with friends and family. Feel free to like the episode. Feel free to subscribe to the channel if you haven't subscribed. You know, we always appreciate it. So we can just continuously go out there and not just share private, but go over the basics, ladies and gentlemen, because even what we're talking about right here, ladies and gentlemen, this is the thought process. If you come to trustee training and you're not coming with that type of mentality of a have, it's going to be rather challenging to move forward in trustee training. And so many people don't want to hear that because they're going to say, well, trust Christian, are you telling me not to come to the vault because I don't have any assets? And we've already told you you're the greatest asset to the trust. So that means that you got to get educated. That means that you have to perform physically different things. And even you have to be able to risk. You have to be willing to do risk calculations. These are different things. Once again, in trustee training, that you focus on, and that's what the haves focus on. They focus on increasing their assets under management. They have assets under management, and they're going to increase their assets under management. We look forward to hearing from you all. Christian at trustchristian.com, whether it's for the next workshop or if it's actually for trustee training. Look forward to hearing from you all. Talk to you soon. Peace. Enjoy.